Okay, welcome everyone to our first webinar of 2025. We do this is Independent RX. We do these webinars about once a month. We typically do 12 or 13 of them a year on a variety of topics. And today we have Greco from Live Oak Bank, and we're gonna talk about 2024 and the things that we're seeing for trends of 2025 amongst a few other topics.
Yeah,
Greco,
thanks for having me.
welcome. Maybe you want to introduce yourself and
Yeah,
if
thanks,
they
Owen.
don't already know you.
Yeah, right. Thanks, Owen. I appreciate you having me on. Yeah, hi, everybody. My name's Greco de Valencia. I'm the Senior Loan Officer and Vice President of the Pharmacy Lending here at Live Oak Bank. And I've been at the bank now for almost 9.5 years, been in the pharmacy and healthcare space for going on 16, 17 years now. And yeah, quite simply, my team does a very simple function, right? Which is get capital in the hands of independent pharmacists who are looking to do a variety of financing requirements and projects. So today we're going to talk a little bit about what we saw in 24, what we see for 25, some best practices, some trends that we're seeing a lot of our borrowers or current customers doing, and then also, some items to watch out for as we go into 2025, and hope to give everybody a little insight from the banking lens on the state of the industry and just the overall climate.
Yeah, it's going to be good. And I'm Owen Bondron. I'm a partner in Independent RX. I'm also an owner in three pharmacies. We have a retail, compounding, and a long-term care pharmacy. My family and my business partner Tim Clark's family have owned pharmacies since the 30s. So yeah, and in Independent RX, we're a firm that helps people start and buy and sell pharmacies, as well as our main business, which is we provide accounting for pharmacies. So that'll give us, between Greco and the bank's perspective and our perspective working with clients, hopefully we can provide you some insight. So I guess, Greco, let's start with 2024. Eh, What 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 what's your main takeaway from 2024?
Yeah, 2024, when DIR fee changes were really taking place. And that was, I think, really, from a lot of our customers. I'll start first from the customers in our portfolio. I mean, that was really kind of what everybody was prepping for. They were waiting to see what was that change going to look like. And, I think broader across the industry, what we've seen now that we've had kind of a full year of that is obviously, when we're looking at a lot of financials from pharmacies, naturally there is now a decline in revenues, right? Not necessarily a decline in total scripts, but a decline in revenues, which makes sense because now those DIR fees are getting taken out at the point of sale. We still saw some doubles going on in that first 4 months, 5 months. When we've looked through a lot of the financials, we saw that, from a number wise, ranging on the volume of the store and the mix, it could be as low as 20,000. It could have sometimes been as high as 100,000. And something that we're doing now in 2025, looking back on 24, we're trying to normalize some of that for a lot of our current customers or to be customers so that we can kind of really get a sense about, like, what the true picture was in the business. We also saw in the banking space, we started to see rate cuts from the Federal Reserve, which I think was helpful because we had gone through a period of very elevated, and we could talk a little more about what we see for 2025 and ongoing. And then the last thing, we saw still a lot of activity from individuals who either wanted to expand their business, buy another one, buy their business. We also saw quite an uptick of individuals who perhaps had been minority owners and were looking to purchase the remaining shares, and had ideas for where they want to take the business. So those are some of the things we saw on the banking side from 2024. and happy to expand a little more on that.
Yeah, no, that was a good recap. I think we saw a similar kind of thing, and I think that led to an attitude of kind of holding. I don't
Yeah.
even know how to explain it, where I think people were, we saw a lot of people, PICs buying out, partners or buying the
Mhm. Yeah.
pharmacies because they knew the business.
Yeah.
But I think people were hesitant to make decisions until they got through that cash flow crunch at the beginning of the year. And then as the year went on, we started seeing people do more changes to their business, adding stores, like starting that process. Um, and I think a lot of the chains closing, we've had what a couple thousand of them close, and
Yeah.
there'll be more this year, has driven a lot of sales into stores or for people to go and open up a second location and et cetera, especially in the second half of 2024. So that was a big thing. And then the other thing we saw was GLP-1 compounding, with the shortage.
Yeah.
Some pharmacies really took advantage of that. And that part has been, especially in the second half of the year. Again, in the first half of the year, I think a lot of people were just trying to see
Yeah.
what was going to shake out here,
Yeah.
and and probably rightfully so, buckled down basically.
I
Um,
agree with that. You're actually you're right about that. Like we had quite a bit of individuals who were current customers who had new opportunities. This was about mid 24. And they
yeah,
basically said the same thing. Hey, look, we're just I'm just going to sit back and wait. And I think that makes a lot of sense because a lot of people are trying to figure out because now you have a little, trying to work through your cash flow, figure out what the reimbursements are. I think, with the chain closures in specific states, say Ohio, Michigan, of course,
yeah,
it broadly happened across the nation, but I think we saw a lot of them happen in Ohio, Michigan. There were people who were current customers, and this is probably, I would say, around the September, October time of 2024, who were trying to figure out, okay, you got a lot of these patients hitting the street. What's the reimbursements like on these patients? What do I want to take? How am I going to manage through this? Thankfully, I haven't heard too many really bad stories out there where people weren't prepared for it. And
yeah,
I think I've also heard some really good success stories of people who were able to properly manage those transitions and get the right kind of scripts for their pharmacy. And again, it just kind of reinforces something that for everybody who is an owner out there, you have to be really measuring the performance of your pharmacy and the performance of the prescriptions so that you can manage it appropriately. And that's something that I think we are continuing to reinforce to a lot of our existing portfolio that now more than ever, if you are just doing prescriptions, you really have to be on top of, what's the margin on all the plans, what are you taking in, the brand generic ratio, how is it impacting you from also a payer perspective with your contracts and your purchasing. So all those things, like you mentioned, were part of 2024 for us.
yeah. No, um, I agree, and then I mean, it was actually, uh, now that we're through it, it was kind of uneventful for the. I mean, the chain closed and we had the GLP-1, but I mean, you and I have been
Yeah.
doing this a long time. I mean, there's some years where things get a little wild. So, I,
Yeah.
yeah. So I guess that leads me to 2025. I mean, where do we think things are going? What are we
Yeah.
seeing so far? I have my own opinions, but I'd be curious to see what you say.
Well, so I'll start with on the banking side. So for 2025, Live Oak, we're still full all in funding pharmacies. Just like anything, 24, you require to kind of sharpen your lens a little bit, look into things a little closer. I think 25 is no different. We are always going because we know so much about the industry. We're going to be a little more laser focused when making credit decisions, and I think you have to be because while we saw some relief in the rate environment, and I don't have a crystal ball here. I'm not, speaking for what the Feds are going to do, but I think most of all the prevailing information and the tea leaves are leading you to where, there may be a few minor cuts here and there, but for the most part, there's going to be a somewhat of an elevated rate environment. And so I think because of that, obviously the cost of borrowing goes up for a borrower on a project. So that's going to require, a right sizing of the project, be it in how much capital they're actually asking for, and that dovetails into a lot of different
Yeah.
subsets when it comes to like an acquisition or an expansion financing. So that's one thing that we're seeing in 25. I think the last thing I'll say is also we're really, if there is a change of ownership, right? We're really keen on making sure that that transition and all the things that are going on with it are pretty much locked in and prepared for as best we can.
Yeah, maybe since you brought that up, uh, expand on what you mean by the transition and making sure that it's really locked up. I mean, I have some thoughts because this certainly has it's gotten more difficult,
Yeah,
the transition. I mean, it just has. Um,
yeah.
uh, for things that we're seeing, Greco, and you're probably going to have some more money-based ones, but like just
Hmm.
even simple things like powers of attorney.
Yeah,
And it used to be you got a one-page doc that says, hey, this buyer can use seller's licenses, good to
yeah,
go. Now I think we have four different power of attorneys every time we do a transaction. There's one
yeah,
for DEA, one for an NCBDP, another one and not all states allow them now. Um, the wholesalers are more stringent about them,
yeah.
and
And
I'm
yeah,
focused on it, but it's one example of 30
yeah.
that are a bit more. It's just harder to do the transition, and you got to spend some time looking at those details to make sure it gets done right.
Yeah, I mean, I agree with you. So I'll just touch on that stuff with the transition to answer your question. So yeah, I mean, if you rewind 7 years ago, I just felt you're right. I think things were a little simpler, even though they still might be a little complex. I think changing hands and changing ownership in any healthcare based business is going to have a layer of complexity. But
Yep.
I agree with you. I think it's definitely ramped up to new levels here. So some of that stuff that I was talking about with the transition is, obviously, if you're buying a business from somebody, clearly you got to know the person or you got to feel good about the person, right? Yes, there's a quantitative factor to that I think any advisor, accountant, or banker is going to help kind of clear, focus
Yeah.
into that. But what we're talking about is the transition phase from, understanding, okay, does the seller's lawyer and do my lawyer, do they understand pharmacy? Do they understand if you're getting an SBA loan? Do they understand the requirements of the SBA financing? Has it been clearly defined what the transition is going to look like? And are we clear on what's going to happen post transition with regards to one of the most important one is, clearing up those accounts receivables in the first 30, 45 days. What are we going to do with rebates? Who's responsible for that? And then also, I think the big one is, are we in agreement on what the price is? And is anybody going to move the goalposts with a month to go, right? And so I think those are all those transitional things. And just to give everybody a little example here, we've had deals where, yeah, they're reconciling claims, but the individual who is doing all the reconciling in the business, it was really more of a business manager, right? And the owner, I don't want to say failed to really mention that, but maybe that wasn't as clearly defined, right? So I think it's all that kind of stuff that you really have to be prepared for in the transition. And at the end of the day, a new owner has to have ideas about how they're going to grow the business. But if you don't have that good transition plan, the first, 60, 90, 120 days can be really rocky.
It can be real rocky. And there's a lot of points there, and that reconciliation is so important. You've got to make sure you get your
Yeah.
funds,
Yeah.
or else, you're gonna be in trouble. Of course, on the flip side to that, that would be the argument for making sure you have the right amount of working capital.
Yeah.
That gets overlooked a lot where people don't, they're like, oh, I'm buying this business that cash flows, I don't need much working capital, but the reality is the business we're in requires quite a bit of working capital when you buy a business, and that's got to be through a combination of the bank and buying AR or having the bank properly
Yeah.
capitalize you. And I understand not taking more money than you think you need, but just remember that as a
Yeah.
business owner, you never have enough capital, and you can always pay it back. Like, I mean, if you end up with too much, you can pay it back. So
Yeah.
you'd better, especially if it's your first time, you're better off having plenty of capital because everything isn't going to be perfect. That there's going to be, no matter how much we plan, there's always a little rocky moment, and working capital is the thing that makes that less stressful.
Yeah. One thing else I'll mention to people is something that they need to be kind of, and we're now seeing this, individual sellers, let's say, had a lease agreement in place during COVID, right? And those lease payments and agreements and terms might be under like a COVID era, let's just call it,
Yeah,
agreement.
sure.
Well, when that new buyer goes to get the new lease, now all of a sudden, whoops, the it could go up. So I think it's like all those types of things that I think, from the lens of the pharmacist and the buyer and the seller, it's like, hey, listen, am I getting the price I want, and am I selling to the person that I feel is going to do a good job? And that's still at its core, 101, right? But it is those other things that we're seeing that we are starting, looking back on 24 and looking forward in 25. Those are some of the things that were really impacting things.
And
And
I think you and I have talked about this before that, a lot of times we see sellers who think that they're just done.
yeah,
I think that communication needs to be there that,
yeah,
listen, I need your help for 6 months.
yeah,
I don't need you in the pharmacy every day, but like
yeah,
we've got to have a plan of how we're going to transition.
yeah,
And I,
yeah,
I think what you're saying is that the the need for that has increased for a
yeah,
hybrid of reasons.
yeah.
And sorry, you may have been finishing up something there, but
No, no, I completely agree with you. And so, and as we're looking at, where for the traditional retail, right, where we're looking at some of the margins going, the room for error becomes very low. And so always starts with price, right? I mean, people have to be offering a price. And I think we've seen now more so, and I'm not saying that this is how it should be, but this is just kind of what we've seen. A lot of the times what the chains are offering kind of drive a little bit
yep,
of where the seller's expectation should be. And so because we've seen that drop pretty
and down.
significantly across the nation, I think we're starting to see sellers now a little more realistic on what the going marketplace price is, which I think has been good for a lot of buyers. And I think more buyers are just more educated about where valuations and things should be. So that's a
Great.
good thing. But if you're not properly prepared in that transition, that can really kind of bite you.
Yeah, well, that's good. So you mentioned something earlier about having a plan and what you're going to do once you buy it. And I guess that kind of segues me into not even just people buying pharmacies, but like, what are you seeing as an overall market and, going forward? What are people thinking about doing? What are they,
Yeah.
you know, because retail business is tough, right?
It can
I
be,
mean,
yeah.
straight up retail can be
It
tough.
can be.
So
Yeah.
I,
Yeah.
I like, what are you hearing plans? I mean, you're probably hearing a lot of plans and seeing
Yeah.
people do things, and as are we. I'll certainly
Yeah.
add to this, but
Yeah. I mean, so we're seeing a lot of people, look at partnering with maybe some or expanding into some franchise groups, right? We've seen a big over the last, I would say 5, 6 years, a lot of independent pharmacists that are maybe, let's say, a franchise group like Vital Care. There's
Sure.
for infusion pharmacy. We've seen some individuals getting into partnerships with some home health businesses in a franchise model. We're seeing people start to really embrace this Medicare agent approach, setting up an LLC, getting certified to be a Medicare agent. We're seeing people diversify, lean into, like you were talking about on the compounding side, knowing the regulations and the compliance, but leaning into that because of the rise of the of GLPs. And I think, um, also people looking at, hey, what about this LTC at home? How
Yeah,
can I
sure.
leverage some of the partners that are out there that can help me understand that more? And so that's kind of what we're seeing as far as people when they're looking at, all right, I'm filling prescriptions, and for all we know, and this is the majority, thankfully, of the people that we're working with, they're like, okay, I've done everything I can on the prescription side. Um, Now where do I go? And I think the really ones who are willing to do that are taking some of those approaches, and they're looking out at some of the industry people, like yourselves, like others that are out there that are offering these services that can help them grow certain segments of their business. Sales and marketing, that's a big one too, right? And I think the advantage that the independents have over, let's say, the change of the bigger ones is a 5 to 10 incremental increase in your sales, or a 1%, 2% increase in your margin, or streamlining your OpEx expenses by 2%. That's a big change. I
That's
think that's
real
the
big.
benefit of what they can do. The only difference is the bigger stores or these larger conglomerate owners or stuff, they have maybe a little bit more of the spread out manpower to do so. And the independent one,
Yeah.
two, three store owners, they're still kind of on their own for that. So you just have to kind of be really good with that time management.
Yeah, no, you know, I would agree. We're seeing, I don't even know how to explain it, like more of an entrepreneurial spirit come back. I mean,
Yeah.
it's almost like, hey, I got through 2024. I got through COVID. I got through 2024. And now like I could go back to being an entrepreneur.
Yeah.
And I
Yeah.
think what's occurred there is going back to what you say, if you got a big conglomerate, they can hire someone and they can go do it. But I do think there's a ton of resources and companies out there
There
now
are.
that can take the individual and allow them to go do
Yeah.
actually make some of these things happen. And we are seeing it. Like, I mean, I don't know that we're working with a single pharmacy that's not doing something. They're all doing it in different, some of them are just doing long-term care at home, or, some of them are doing all of those things at a big scale. But I, every one of the pharmacies I think we work with is doing something, and
Yeah.
they're, adding some kind of service or a cross sale, or, you know, uh, and we've seen some people take immunizations to doing 10,000, 20,000 immunizations out
Wow.
of one location, right? Because it makes more profit and they can go sell those things. So finding the things that can make them money, get a niche. I guess what I would encourage people is, if you're interested in something and you think you can sell it, there's probably a company out there that can help you do that.
Yeah. Yeah. That's true.
Um,
Yeah.
and that didn't always exist.
Yeah.
You
And
know,
and and I'll say one thing, make sure you interview them. Know what
yeah,
they, get the testimonials. There are some out there that are just really, I was just speaking with one, and just for the interest of this webinar, we'll kind of keep it just broad, but it was focused on sales and marketing, and helping stand up the practices, formalize sales and marketing, and integrating with the patients and their lives. And so there's all this type of stuff that's out there. But you're right. You gotta do your homework, and you gotta also just find the time to do it.
yeah, you do, which, I mean, comes back to what you said earlier about knowing your metrics and stuff, because
Yeah.
if you know your numbers, you know what you can and can't do.
Yeah.
And we've actually at the beginning of the year talked about the fact that, and I've seen a couple articles that are non-pharmacy related about this of, check your bank account daily. How did it move? I
Yeah.
know, I mean, getting back to some of the real basic things, I think we had so much,
Yeah.
you know, distractions and stuff there for a few years that, getting back to how many scripts did you fill? If you're trying to
Yeah.
grow, long-term care at home, did those scripts go up? Yes or no?
Yeah.
Um, did what's your margin? What is your cash balance? Like just understanding that because then you know what resources you have available to go, okay, I'm going to delegate this to this person. I'm going to delegate to this person. I'm going to hire this person. Now I have time to go do these things.
Yeah.
But if you don't know those real kind of basic numbers, you're not going to be able to make decisions as to what you can and can't do. And so you may not do as much as you think you that you could have done, or you may do too little. And that's where it all starts is in that knowing your numbers. So
Yeah, well, and I mean, anytime you're looking at expanding, and I know we'll dive into some of the other things that we've seen in 25, or we're going to see in 25. But anybody that's out there looking to buy the business, I think that just is going to overall strengthen your application, your conversation with the bank, right? I mean, if you're prepared for those types of things and you kind of talk through them a little bit, I think it's pretty critical. So
yeah, no, totally. If you know your numbers and know what you're going to be looking at, that it makes you guys want to lend to them
yeah,
more.
yeah,
And I guess as a seller, I would encourage you to start going down some of these niches because that's what people want.
yeah.
I mean, I teach a class at a pharmacy school, and you know, they teach clinical. That's what they're teaching.
Yeah,
Um, I mean, none of these pharmacists want retail business.
yeah,
They all want this clinical stuff. So, and there's a lot of profit in some of this stuff. These other routes that we're talking about of infusion with vital care, or adding compounding, or just long-term care at home, or even Medicare agent. I mean, it's just a little bit more exciting. And
yeah.
in addition to that, it grows profit. Uh,
Yep.
yeah. So I guess if I'm an owner, or let's stick to current owners, and
Hmm.
I want to go do some of these plans. I mean, you talked about time. The other thing you have to have is money.
Money. Yeah, right, right. Yeah,
So, like, if I'm an owner and my business is doing okay, but I only have, let's say, 200,000 in the bank, and
yeah,
I don't want to drain my bank account to take a risk
yeah,
on doing something that may or may not work. Like, what are my options? Because I mean, a 7A loan may be an option, but like it seems excessive to me uh, if I'm just trying to add,
yeah,
I don't know, or I just need money because a chain closed across the street even.
yeah, yeah,
Yeah.
yeah. Yeah, I think on the broad, so I'll talk a little more from the broader banking perspective, right? So obviously it always starts with you got to have some pretty sound financials, right? You got to make sure that you're doing all the right things as far as where your financials are out today, right? And I think Owen, like your team does a great job with making sure that, hey, our borrowers up to date with where things look like, right? So I think it always starts with that, okay? Next is, you have to kind of understand, well, what am I going to look for? Am I looking for short-term or long-term capital? Short-term or more in like the forms of the lines of credit, right? Even dating from the wholesaler, things like that. Um, I think we've seen a rise with some of our current borrowers is they're now getting into a little bit of some of, they've always been there, but the cabbages, but now we've seen like American Express up this where they're giving, it's like a short-term
Oh
loan,
yeah,
but
yeah, I've seen this. Yeah.
kind of not.
Yeah.
And it's got these really high interest rates. When I say high, I mean like credit card level interest rates
Yeah,
at
like 20s.
21%.
Yeah.
Yeah. So people need to be a little aware of that. But I think, that's kind of one thing, right? Are you looking for short term, long term? Long term is going to be more like in the range of like a 7A loan or more
Yeah,
any
sure.
type of loan that's going to be at least 5 years or longer, right? I would put that in the long term category. And I think, for on that category side, we've launched at Live Oak Bank. We have our express loans, which is intended for anything 500,000 and below. It's not, again, speaking from a broader banking term, those are a really good product. I think, Live Oak, the goal there is to get a very quick turnaround on it. Again, it's going to start with those sound financials though. So people that don't have that sound financials, that's going to be harder. It's also based on a scoring, based on like a small business kind of almost like a business scoring, a credit scoring, as same
Yeah.
as you would have for your personal credit. And, I think it's a sweet spot for individuals that are anywhere between 150 to 300,000, right? And I think those are kind of the things that people need to be considering. Short, long term, what kind of product, what's the rate that I'm going to get, and how do my financials look when they stack up to try to get them?
Yeah, I guess the only thing I would throw into this, and I think it goes back to the short versus long term versus the type of loan, is cash flow,
Yeah,
right? So, that American Express loan may sound good, but you got to look at the payment because again, how much cash you have at the end of your investment is key. And some of that can be the long term versus short term. What I always say is they always say that short term is for like short term problems. Like, hey, I need
mhm,
$50,000 because I had this one time bump in sales versus a long term capital purchase. Like, hey, I'm building a compounding lab. Well, that
yeah,
probably should be over time because you need time to buy it. But in the end, you need to look at your cash flow and how is it going to impact your month to month profitability. And you don't want to take out a loan that, doubles your debt, for example, for 100 grand. I mean,
yeah.
that just doesn't make sense, right? So,
You know, you know
and
what?
and talking to a lender who understands this and will tell you the truth, I think is another
Yeah.
important piece to all of this.
Yeah, I mean, we pride ourselves on our expertise and our processes, and I think that kind of goes sometimes. Um, we're just I particularly don't like to brag about our processes, but usually when people get a get the curtain pulled back on where what how like sophisticated we really are with our processes, it's a pretty impressive thing. And we do pretty much shoot it straight to the borrower, right? Like, yes, this works, no, it doesn't. But one thing I want to just circle back on is, short-term events can also cause long-term problems. And one
Sure.
one thing that a lot of people need to kind of be aware of, and I don't know if this is talked about as much, but and it's very natural, right? People make wholesale changes, they make PSEO changes all the time. But going back to another comment you made too about how it's becoming a little longer and a little harder,
Yeah,
those that short-term change can really have some long-term effects. Like, for example, we've seen some people who are making the changes to the wholesalers for whatever reason, right? Which is fine. They can do that as much as they
yeah,
want. But, what is that going to do now to where you were getting your rebates to where you're getting them now? And most importantly, on that PSAO change, there's going to be this period where there's funds trickling over from both sides, and there's going to be, depending on who you're using for your reconciliation, there'll be a period where you can't really see it. And so that can cause some, that's a short-term problem, right? Because usually the new PSO gets you up in like 30 days and stuff, and you have your visibility again quickly, but there is still that carryover where if you're not properly prepared for it, and you stack some cash, that short-term change can cause some long-term problems to your cash flow.
Yeah, and to expand on that, I mean, when you switch PSAOs, your whole timing might get thrown off for a period. Like you're
Yeah.
used to the big deposit on Wednesdays, and now it might be on Friday.
Yeah. Yeah.
And then your rebate now is not coming monthly, it's coming quarterly. And so you start adding these three things together, and it can cause a cash flow crunch that if you're not prepared for, could become a long-term problem. Uh,
Well, look
and
what happened in 24 with the Change Healthcare issue, right? I
yeah,
mean,
that's a great example.
there are so many people who for, 30 days or so, and this has been, I think, a problem we have seen, and it's not like I would say widespread, but it's probably happened more than what we've heard. There were a lot of people who just were like, there's like $250,000 of receivables I never got. I know they're out there, but nobody can account for them. You know, that's on a little bigger scale because that's not something that someone, the owner chose. That was something that was kind of occurred to them.
Yeah.
But I think it just lends itself to where, if any changes in those reconciling, any changes of how those receivables are brought in can cause some of those issues. So I think
Yeah,
that
and
also goes on to where you got to be prepared.
well, and to compound that, I mean, you gave an example of, yeah, we heard that too, where there was people who were just missing 200 grand, but we also saw situations where people were missing 15, and then they had the double DIR fee.
Yeah.
That was another
Yeah.
30, and suddenly a 15K problem was a $45,000
Yeah.
problem. And so same with the PSAO switch, like if you get one thing move and another thing move, they start
Yeah.
compounding, and now you have a cash flow
Yeah.
crunch that you've got to start back over and rebuild all your cash. So,
Yeah.
you there, but there's options to figure out how you deal with that cash crunch through lending options and a combination of being prepared and make some phone calls, talk to some banks, talk to people like us or the other accountants. They all see this all the time, and they can give you some good advice as to how to make some of these decisions. And I think Greg and I are focusing in on some of these decisions because I personally have seen I feel like there's a lot of movement in the market, not just buying and selling, which I think we've seen an uptick of,
Mhm.
but also people doing things like adding these services, switching wholesalers. Like people are almost seem invigorated to like go after their business and make them better. That can actually cause problems as well if not thought through properly and
Yeah.
well funded.
Yeah,
Uh,
I think that, I mean, definitely, obviously there's been, and we'll talk about this, and this is still on the topic of a lot of people, chains closing, and now we're seeing some more of the maybe regional like grocery type chains that are closing too. So now, there's always going to be a shuffling of patients that are going around. And you're right, people, that has an impact on your business financials. It's going to sound crazy as a banker, but I'll be honest with you, a lot of the times the last resort should be taking out debt. So,
yeah,
if
I
you
agree
can
with that.
get a good handle on the business, and have those cash reserves, and you feel like, hey, listen, I'm ready to make this move, then and you've worked with your advisors, and they're saying, you're ready. Maybe that also might be the time to go out and get the line of credit, right? Or to go out and get the short-term 150, $200,000 just in case debt, because your financials are strong, it's good versus afterwards. And, there's that old saying, banks are always there to give you the umbrella when the sun's shining, but not there when it's raining. So sometimes you have to kind of think about that too. And you're right, Owen. It's just about having those open conversations, and being prepared.
Yeah, no, it definitely is. Um, any other trends, things you're seeing or expecting to happen? Words of wisdom that you'd like to put out there?
Well, I mean, I think, open enrollment came and went, and, the new plans are going to be there. I think people need to really, really, really keep an eye on what these, brand effective ratios and things are going to be impacting. I
Uh,
think,
that's an
you know,
interesting thing, Grego, because I mean, we've seen some extreme situations, but I mean,
yeah.
we've had a few clients that are highly concentrated in a
Yeah.
particular payer or what have you. And for some of them, it's actually been great because
Oh, good.
reimbursement went way up.
Oh, that's great.
For others, it's the opposite effect. Um, or they were so prepared in open enrollment that they got a lot of people to switch to the better plans because they said, "Oh, this is going to be bad going forward. I'm
Well,
gonna
that's,
I'm gonna really go after this." And
yeah.
I mean, we since I mean, the swing in profitability, it is. I mean, I think when I look at reimbursement across all payers and everything, it kind of seems like it's evening out from last year, like it's kind of the same.
Hmm.
But it is kind of amazing how one can be here and one can be great.
Yeah.
Like the difference in literally from bin to bin, not even from payer to payer, like bin to bin within a payer,
Yeah.
one can be really, really good and one cannot. So, understanding your data there going into open enrollment and
Yeah.
I mean can make or break your business actually.
Well, I think that's where, we have a few customers in our portfolio who are Medicare agents, and that they took that proactive approach to do it, and it did help them in that.
Yeah.
But that's something I think looking in 25 and people and beyond, I think people got to make sure that you're looking at that. You know, hopefully, I'm hoping, that there will be some increased focus on legislation and some increased monitoring on the PBMs. But that's more of like a long term, that might happen in 2 to 3 years, hopefully sooner. But I think in the immediate, people's got to watch, they've got to watch those plans and what they're getting reimbursed, especially on the brand effective ratios and things. They got to know that, make sure that you're really just monitoring the reimbursements on the scripts. And unfortunately, it's like uh I was listen I was listening to Marketplace yesterday, and there was this piece on farming, and the guy said that farmers are like price takers. And I was almost kind of like, well, healthcare professionals kind of are too, because so much of
Yeah.
it is dictated on what the reimbursement is, right? So they're kind of price takers too. So I just think you have to kind of watch those more, watch what the drugs that prices that you're buying, manage those things a little better for 25, and look at areas that you can improve. And that's kind of what we're really looking out for, and just again partnering with good buyers. Look, there's still opportunities out there. We're having probably one of our most busy fourth quarter, first quarter that we've ever had, and a lot of it is in different areas. So that's what we're final words. And I don't know if we want to take some questions from the crowd, but that's what I'm saying.
Um, yeah, there is a Q and A if anyone wants to add some questions that are in there at the bottom of your screen. I guess as people put those in there, yeah, I would agree with you on how can the point about the giver and taker. I mean, we have seen a lot of people, and this gets delicate, you know, saying, "Hey, I'm not going to fill a GLP-1 unless it's
Yeah,
compound," right? Because they lose money on it. It's a high cash take. And that's improved people's cash. I mean, their profitability isn't moving much because they're losing, but like they're losing, I don't know, 5 grand on the year. It's not like it's tanking their business. The problem is they're losing 5 grand and spending 150,000 to buy those drugs. And so it's eating up all their cash, especially if they're growing. So, looking at some of this stuff and going, I think us as pharmacy owners, we want to take care of people and we've always just been given a price, so that's what we do. And maybe sometimes going out here and looking at your business different and going, should I be doing this? And maybe the answer is yes, maybe the answer is no, or maybe it's a hybrid.
Yeah.
But I don't know that we're pharmacy owners are always great at going, should I be doing this? Because they've been dictated what they're supposed to dispense, what they're supposed to sell, what they sell it at for so long that they kind of forget that, you know what, you're a business owner and you have some control over what you can and can't do. Maybe not so much as like a pizza place, but like you do still have some
Yeah.
control over, it's your business, and so you can take control of it. So,
Yeah.
um, well, this is good. I appreciate the time, Greco, and
Absolutely.
it's always good to go through this with you, and uh, we'll we'll um, we'll go from there. We did have another question coming in. For other services added to retail, it mentioned was compounding GLP-1s, vaccines, Medicare enrollment. Are there any other growth opportunities? Oh my gosh. There's more than ever.
Yeah, I
Uh,
think I think Owen, what you might have to do is get to host a whole webinar with that with one of your clients that have done some of these and get firsthand
we're
testimonials.
we're actually gonna try to do some more um webinars on some of these topics, both with
Mhm.
vendors and with people who have done it, because I mean there's 340B, there's diabetes education, there's smoking cessation, there's selling like weight loss consults, there's I mean, labs, testing. I mean, it just kind of 10 years ago, you could sell scripts. Today, you as a pharmacist have so many different RPMs, CCMs. There's all this stuff that you can do. And that's kind of Greco and I's point is that you have a lot more options, and we're seeing people get a bit more entrepreneur about their businesses. And they're adding these things. I actually think it's almost getting harder to figure out what you should do and not do than it is, what are my options to add on? Because not every one of these services is right for every business either. And you need to have relationships and stuff to grow them. And some are more capital intensive than others. So stay tuned. We are going to do some more work on this because it's coming up and those questions are a lot. And it is an important part, I think, to the future of pharmacy.
I'll give one thing that people can look into, and I think we're seeing this a lot. We saw it a little bit in 24 with the rise of Cubans, cash only pharmacies, and I think there's some other independents out there doing some pretty cool things. But look at implementing a cash plus program in
Yeah.
a cost plus program for cash in your pharmacy. Not every single community and not every single mix is perfect for that, but that's another thing that I think people can look at. And I'll be honest with you, some of the Medicare agents that I've spoken to are talking about how in 25 and 26, some of those tiers changes in people's plans are going to impact what they have to pay in deductibles and co-pays. And so sometimes I think implementing a cash
Yeah.
only product in your pharmacy could absolutely help not only your patients from a monetary standpoint, but also help you from a cash flow perspective. Um, and then Owen, we have one last question in here, or one more question. What are your recommendations for how long a new owner should wait before implementing new changes, ideas, especially when the pharmacy is pretty stable and cash flowing well post-sale? That's a great question.
Yes.
And Mike, congratulations that at post-sale your pharmacy is doing pretty stable and cash flow and positive. That's amazing. That's great. I don't know, I think the answer is going to really depend on the appetite of your staff and your patients. We always kind of recommend, waiting about anywhere between, at the minimum 6 months to about a year. to start to implement changes. But it also depends on, how drastic those changes need to be, right? Like if you're using an antiquated pharmacy software system, from the old owner, and by changing, you're going to be able to not only increase workflow, but you're going to be able to have better visibility into the prescriptions that you're filling. We've had some new owners go huddle up the staff and go, listen, we're 6 months in. Maybe a year in or less. We got to rip the Band-Aid off. We got to make this change. And then there are other minor ones, right? Like changing the facade of how the pharmacy looks, changing the location. I think those are a little longer term once you kind of get a handle of how things are going.
Yeah, to add to that, I mean, we've probably purchased, I don't know, 20 pharmacies for ourselves. Our philosophy was always don't change anything as little as possible for about 6 months. And our goal during that 6 months was to know as much as we could about that pharmacy,
Yeah,
how every little thing was done, who did it, who the personalities were, like who the patients were, who the doctors were, how will calls were done, how inventory was done, just every little tiny thing, because that would help us make the decision as to what needed changed first, right? And, sometimes there's small changes that can be made that have a much larger impact, or could pay for the bigger change you want to make. So I think your goal in the first 6 months is have everything be fine, especially if you're cash flowing, and just continue to do so and know more about that business than, you know, you should know so much about that business in the first 6 months that no one will ever know more than you. And so, because that's what will allow you to make good decisions going forward. After that, I think Greco gave good advice there. It's about, what can be changed easily and has a big impact, and then what are your long-term plans that you need to plan more for. And that's how it starts. So that's good, great question. We get that one a lot, actually.
yeah, that's a
Um,
good question.
so
Well, it's like the old saying, right? If it ain't broke, don't fix it. But I think there's some truth to that, but also, you also have to look at what can be changed minor to improve things, and if it's a major change, how
well,
much is that going to impact my staff and
li
patients?
listen, you can go too long without making changes. Good
Yeah,
businesses change, right? I mean,
absolutely.
look at Apple. Had Apple continued selling computers, we'd have no Apple. That's an extreme example of it, but they sell phones and music
Yeah,
and iPads, and I don't even know what they're selling now. Same with McDonald's. I mean, look at McDonald's. They tear their buildings down, and I'm not advocating for you to tear your building down, but they tear them down and rebuild them, what, every 20 years or something like that?
yeah,
Because they got to change, or else, like, someone will replace you. So you do need to make changes, but when you take over that business, I think you just need to understand what you have first. Then you can make good decisions about what needs to be changed.
yeah.
So, all right.
Well, Owen, this has been
It's
great.
good.
I'm typing my information into the chat here, my email address, and people can reach out to me if they have more specific questions about their project or about their pharmacy. And always email me. Just let everybody know I am in California and on Pacific Standard Time, so there's always that time change difference if it's there. And Owen, thank you so much for having me, and everybody. Happy New Year. Good luck in 2025 and look forward to seeing everybody soon.
Yeah, likewise. I dumped our website in there. You can schedule a time with us. This is being recorded. We will repost this in the next day or so. It'll be on our website, social media. We'll email it out if you want to review it or share it with someone. Thanks,
Awesome.
Rico. Appreciate it.
Thank you.
We'll see
Bye.
you. Bye.